Understanding HighLevel's wallet system might be one of the most complex things that is actually going on inside of HighLevel. But if you survive Chuck E. Cheese as a kid and you can stick around for the next few minutes, I think we can get to a place where you understand it and you know some of the pitfalls that you can avoid. I want to make this short and sweet and to the point. So I'm going to actually jump in, share my screen, and talk you through what's going on. First thing to understand is there's actually two wallets inside of HighLevel's ecosystem. There's yours as a company, or the agency wallet here, which you can get to from the agency settings and then billing area. And then there's also your sub accounts, your clients, the customers, your subscribers. They all have their own wallet. And both of these function similarly in the sense that you actually recharge them with credits. These can be gifted as part of the subscription, which you can check out my video on SaaS mode if you want some advice and tips there, or they're just manually charged based on usage. But the helpful understanding is your wallet balance always has to be greater than what you've actually used. HighLevel will not let you, especially as the agency, spend more than they've already collected from you. For the sub accounts here, technically they can overspend, but the liability falls back on you. There are some protections in place to prevent this from happening to a horrible degree, but ultimately understand in its ideal state, there is a greater balance in the wallet than has been used for some of these incremental things. The second thing to understand is there are rebillable things inside of HighLevel. This could be phone, text message, voice, AI, all of these things, emails, all of these things come together and have, penny per usage. You actually see the product examples, the fast track, registration for A2P, call recordings, auto completing an address, calls, conference calls, the AI features there, inbound SMS, inbound multimedia sending messages, all these sort of things have small incremental costs. And so they draw from the balance inside of your wallet. Now it's helpful to understand the difference between what's considered accrual-based accounting and cash-based accounting. Cash-based accounting is when someone puts $20 in your Stripe account and you've made $20. That's it. Accrual-based means when it's actually used, when the service is delivered, then the balance is adjusted. So if you think about this with like annual plans, if someone pays for a year up front for, let's say, $1,200, cash-based accounting would say in January, you made $1,200. Accrual-based accounting would say in January, you made $100. And then in February, you made $100. And March, you made $100. And so it kind of like holds that balance and pulls from it as the service is actually delivered. That's sort of what's happening between Stripe accounts, credit cards, and wallets. In your Stripe account, if one of your sub accounts charge their wallet, they fill it up and they put $10 in there, your Stripe account is going to show that you made $10. Now, HighLevel is going to manage accounting for that spend because next month it might show they have a balance of $9 and then $8 and then $3 or whatever it might be. Whereas to you, it looked like you made $10 on month one and then nothing until it recharges the wallet. The same thing is happening for your agency wallet, but now you're paying HighLevel. Your client, when they charge their wallet, it's going to your Stripe account. When you charge HighLevel's wallet or the agency wallet there, it's going to HighLevel's Stripe account. Cash goes in, that's the deposit, and then accrual is the accounting for the actual usage that's happening there. Where it gets especially complex is when reselling is involved and between wallets. So if you're reselling, let's say 200% on a phone registration, which costs $1 per month, your client may have had a $10 balance. So it's $10 in your Stripe account. They've got $10 balance. They buy a phone number. It costs $2 because you're charging 100% upsell. So their balance is going to go from 10 to 8 minus 2. On your agency wallet side, HighLevel charges you $1. So your balance is going to go from whatever it is, $20, and it's going to subtract by 1. So the sub account subtracted by 2, the full retail price with your upsell in there or your upcharge. Yours is going to subtract by just HighLevel's cost there, right? In this case, $1. And so you kind of have 4 different things all being accounted for. Your client's transactions, what they're paying you from a cash perspective in your Stripe account, your costs, what you're paying HighLevel out of your credit card into their Stripe account, and then the wallet-based system, what's actually being used on an accrual basis. Hopefully that helps in understanding it. I will say digging into the actual numbers gets even more confusing because you can go under detailed transactions and it'll show you every little thing that's happening and every tenth of a penny that's being charged out and what sub-account it's being charged to. So my recommendation is put reasonable parameters in here so that you sort of stay alerted if something changes. And then also you don't accidentally overspend. On the agency side, you get to control what your recharge threshold is, how much you're recharging, and then when does that happen when the balance is lower than a certain amount. If there's a surge of activity, you'll get an email, but you see, it's kind of crazy. You can go up to $15,000 that it recharges with. I'm going to definitely change that back. $15,000. That what is happening? HighLevel is charging you to your credit card. You really do want to keep an eye on this and make sure that you don't have a situation where your client is spending out the wazoo, not realizing it. It's charging them. HighLevel's charging you, and really it's all being consumed. And so this is where, you know, having certain parameters here, limiting the recharge, and then I actually would consider wisely putting a limit on the credit card that's happening here that's in balance with what's reasonable, because the ultimate end all be all stop is if your agency account balance stops, HighLevel will stop it. They will not let you use their services if they don't have a wallet balance in there, because they realize that's a true liability and they will not carry that liability. And so, like I said, there's some parameters in here where you can logically constrain what SaaS mode allows them to do, but I've definitely seen exceptions to that where a client will overspend their balance and you as the white label reseller or agency account holder are limited and liable for that. So hopefully this is helpful and gives you a better understanding of what's going on with HighLevel's wallet-based system here. I mentioned a couple things. I'm going to go ahead and link to my video on SaaS mode. If you don't want to use Stripe, I've also got another video here on how you can do non-Stripe payment processors. But as you're getting into the HighLevel ecosystem, learning more about white labeling and reselling, hopefully you'll subscribe to the channel. We got more content coming out. We stay up to date and fresh on all of these things, and I will see you on the next video.